Welcome back my YouTube channel CoinZF to today's video. We're diving into a fascinating topic that will unravel the journey of the Syrian pound, specifically the value of the 1424 and 2003 Syrian banknotes, and how they tie into an incredible valuation of $103,000 million. Now, this might sound confusing, but stick with us as we break it down and help you understand the intriguing history and significance of these specific banknotes. Don't forget to hit the like button and subscribe for more insightful content on currency, collectibles, and investment tips. Let's start with a little background. The Syrian pound, SYP, has been the official currency of Syria since 1948, replacing the Syrian lira. For decades, the value of the Syrian pound has fluctuated dramatically due to the political climate, economic policies, and conflicts that have affected the region. In the early 2000s, Syria was already facing challenges, including international sanctions and internal political instability. As we look at the 1424, 2003 in Gregorian, and 2003 banknotes, we can trace back their significance in a country's financial system that was already under pressure. The 2003 Syrian pound note, a relatively modern currency piece, carries immense historical and economic value, as the country was on the brink of a series of events that would shape its future. The valuation of this currency is deeply tied to both the government's economic strategies and the international market. In 1424 AH, which corresponds to 2003 in the Gregorian calendar, Syria was experiencing a period of economic transition. This currency issue marked a significant turning point as Syria began to open its market slightly. Yet the weight of the Syrian pound continued to struggle against foreign currencies. To understand the value of these specific banknotes, we need to delve into the factors that contributed to their worth. Notably, during this time, Syria was grappling with challenges like hyperinflation, a steep fall in foreign reserves, and a volatile currency market. With the rise in the global price of oil, which forms a major part of Syria's economy, these factors had a massive impact on how currency and inflation were viewed. Now, let's discuss the $103,000 million valuation. This figure doesn't just reflect the face value of the currency itself, but rather its impact on Syria's financial ecosystem. If we break this down, we're looking at how the government-issued currency in 2003 is part of a broader economic pattern of massive inflation and the currency's devaluation over time. To understand this valuation, we'll need to dive deeper into how the Syrian pound's value compared to other international currencies at the time, how the economy shifted due to inflation, and how the Syrian government adjusted its fiscal policy. From 2003 onwards, the Syrian pound faced a significant drop in value. And by the time the country faced the full scale of civil conflict beginning in 2011, the pound was experiencing one of the steepest declines in modern currency history. WY 2011, Syria entered into a full-scale civil war. This not only destabilized the country politically and socially, but it further accelerated the depreciation of the Syrian pound. The inflation rate skyrocketed, and the cost of living for Syrians continued to climb. As the conflict intensified, Syria's foreign exchange reserves dropped dramatically, making the Syrian pound even weaker. With the international community imposing sanctions, Syria's currency system became even more fragile. For example, in 2015, the Syrian pound's value dropped from around 50 to the dollar in 2011 to over 300 to the dollar. The difference in value, when compared to the $103,000 million figure, reveals how far the currency has fallen from its once respected position. Interestingly, despite the dramatic depreciation of the Syrian pound, collectors around the world have taken an interest in rare Syrian currency, especially notes like the 1424 and 2003 editions. These banknotes represent more than just money. They hold historical significance that if you're a currency collector or investor, you might want to keep an eye on how these notes continue to evolve in value as the conflict in Syria eventually stabilizes. Some collectors believe these notes may become increasingly rare and valuable as they become part of a diminishing supply. We've also seen how some countries with hyperinflated currencies, like Zimbabwe, have had their old banknotes increase in value after the inflation crisis subsided. Syria could eventually follow a similar trajectory. While the Syrian pound's future remains uncertain, the hope is that Syria can rebuild its economy in the coming decades. Once peace is restored, the government might attempt to stabilize the currency once again, and we could see a new chapter in the history of the Syrian pound. However, the road ahead is long and difficult. The 1424 and 2003 Syrian banknotes will forever be symbols of an era marked by political upheaval, economic turmoil, and the resilience of the Syrian people. As collectors, historians, and investors, we may look back at these currencies as key pieces of history in the world of finance. That's it for today's video. I hope you've gained a deeper understanding of the Syrian pound's history, its impact on global markets, and how the 1424 and 2003 banknotes tie into the staggering $103,000 million valuation. Don't forget to like, subscribe, and hit the notification bell for more content on coins, currencies, and the stories they tell. See you in the next video.